You know what time it is. It's time for a Sunday report coming at you late. I just got back from vacation. I'm very sunburnt and exhausted, but nonetheless, I have yet to miss a report, and this won't be it. So today we're going to talk about Elon, we're going to talk about energy, and we're going to talk about this bear market rally. How long will it last? Where is it at? Where should your eyes be? When's the next low going to come in? Let's talk about it. Last week we were talking about this market melting up, and it looks like we've seen more of that. Looking over the week, seems like we've seen some chop coming into the end of the week, and we see that the market's coming down a little bit at the end of the day. We've been looking at this, on Friday, it looked like it was going to come down, but I was seeing all the indicators that this market was going to melt up. I mean, it did a very dumb thing. People in the Discord know is I actually set up some calls right around this area, seeing that a bounce was coming, and then it actually got stopped out. I was busy packing, not really paying attention. It cut my trade, and what should have been a very profitable trade ended up being a loss, which, hey, take that as a good example of why you only trade when you actually have time to trade. I saw the indicators, but it didn't mean I needed to make that trade. I was too busy. Dumb thing to do. However, I think we're going to repeatedly see this. This market looks like it's going to have chop days because it seems like it's going to have some fake outs to the downside. But I think this market is still going to continue to melt up. However, I do think that lots of news could come around that could throw this right off of its track. And we could see some capitulation on a bad news report. So if we look over here at the economic calendar even, let me get me out of the way, we can see that we're going to have some inflation data come out on Wednesday. Now, remember, this is expected to come down in the next few months. I expect it to be persistently high. So these numbers, this PPI data that we're all going to get this week is going to be a big deal. And I think the Fed speeches are having less of an effect on this market. So even though we're going to see these, and these will likely be bearish, and reports are saying that a 75 base point hike will be coming up later in the month, I think that this market might go ahead and weather that news for the time being. Now remember, this consumer sentiment data will also be a big indicator because remember, this tends to be a revolving door effect where if people start to get really bearish, it ends up creating bearish conditions because they stop spending their money. So that could also tell us how long and how deep this recession really will be. So keep that all in mind for the upcoming week. Wednesday is going to be the big day for your inflation data. Monday's not a lot going on. This could be another melt up day. Same thing with Tuesday. Remember, if we get any big headlines, any negative headlines, though, this market could turn very rapidly. Because even though we are looking to be, in an environment that looks like this market wants to continue on its rally, if we go to the 1 hour, there is some strength here. Both stocks are still below their 200-day moving average, showing not a lot of momentum. And so, but except in the technology sector where you're having a lot more there. So I would look at tech if you want to play this rally. But for me, mostly I'm going to be looking for that return to the downside move. That's going to be your bigger move. Even though we're seeing some rallies, there seems to be no indicators that we're going to get a sustained bullish rally. This is still a bear market. Keep that in mind. If you chase this, you want minimal exposure to the upside. Make sure that you still have your risk on in this environment because it's still a very troubling environment. And just to further reiterate where you probably want your eyes in this market, we can look here if I pull up the Discord with some recently shared information. And you can see the integrated software, renewable energy, biotech, and medical research, which I've been talking about a lot. The biotech's been strong, and now we're starting to see it actually pull up as one of the overperformers in this current market. Automobiles making some recovery, and also home building and construction. So this is a big thing to look at for where you're seeing the recovery at. As people start to leave energy, because a lot of analysts are saying, hey, oil's going to come back down. Energy might not be the trade. We're seeing that start to flow back into renewable energy, start to flow back into what we talked about last week, cloud computing and these huge data centers that are being opened and technology on the rise. So we're seeing a lot of that flow into here. And then biotechnology also still near the top. So those would be the sectors I would look at if you want to play this to the upside and you're not looking to play the indexes. And speaking of oil and energy, I do want to take a moment and do a further breakdown and dig into some research. One of the people that I want to give a shout out to for what we're going to talk about today is Lynn Alden. She is the founder of Lynn Alden Investment Strategy. I've been following her for a long time. She makes it on a lot of popular financial talk shows and provides a lot of content to the industry in general. She's got a very sound track record. And so this is one of her articles that she recently put out, and it definitely caught my eye. This was actually, I think, just released just earlier today. Literally 51 minutes ago. But I thought this was a great read because it opens the door to kind of what I've been talking about for a while, but from a different angle, okay? One of the big things that she points out in this article, we kind of scroll down here, is that spikes in energy tend to not cause long-term issues. It's sustained high energy prices that cause restructuring. Hey, if you like the content, please like the video, maybe consider subscribing, ring that bell, leave a comment. It all helps the algorithm, helps you keep up with our content. Appreciate you being here. Enjoy the rest of the video. And we can see here from this chart that she found from Macro Trends, the logarithmic prices for oil. We could see in the 1950s that oil was a lot cheaper. And then we saw in the 1970s, which a lot of people draw correlations between now and the 1970s because of the inflation and the overall energy environment. We could see that energy found a new baseline for where prices were at. It was a shift to the upside. And then in the 2000s, we saw another shift to the upside. What prevented some of that shift here was us displacing a lot of our exports to China and a lot of our production to China. This also caused some suppression in wages as well when we used them for a lot of our production. However, when we look forward, it doesn't seem likely that we're going to get that same scenario to cause this sort of deflationary pressures on pricing, which means that this could become sustained higher for a longer period of time. This is different. These changes are evolving. And one of the other things that I think is important to point out here that she mentioned in this article is that OPEC, we're draining our reserves and OPEC doesn't have a lot to continue to push on this side. Here we go. On the supply side, there's credible evidence that OPEC doesn't have a ton of spare capacity left. While U.S. shale producers are being a lot more disciplined and only producing oil and gas that is profitable to them to do so, unlike the prior decade where they and their investors were happy to drill in profitably as long as it held the top line growth, as long as it met top line growth. Now, a big thing here is that the permits are different than they used to be. You know, the government now can step in at any point and say, no, you can't do that. And there's a lot more of scarcity for wanting to do this work as well. So people aren't taking the same risk in the industry as they did previously. They're trying to keep their cash flow high. They're not taking as much risk. There's a lot of politics in this area that there weren't previously. So she makes the case that, hey, oil could indeed drop to $60 in a severe recession. But she has a tough time modeling a scenario where oil persistently goes back to $60 and stays there comfortably. For a lot of the things that I already iterated, this is a different environment. And remember, this case that she's making is not what the mainstream consensus is. Most analysts are saying energy prices will come back down, and this could lead some volatility in the sector. However, a lot of industries that are not directly in energy are also using that for their forward-looking estimates on where the economy could go and for where these businesses will end up. They're all pricing in cheaper energy prices all the way out until December. If these prices don't make that movement on the charts, and we see these be persistently high, it's going to need a reevaluation across the broader market, not just in the energy sector. And so I think this is really important to pay attention to, regardless of if you're actually in an oil trade. And this is one of the reasons why I have been so hyper-tuned to this through this time period. Because it doesn't matter if you're not a big oil trader and you don't really want to pay attention to this, because even if you're trading technology stocks or just things that you think are uncorrelated, all of this will have a ripple effect from what goes on in the energy conversation and commodities in general. Inflation could be persistently high, and the energy could play a role into that. And not every recession causes a pullback in energy prices. Remember, energy is where it's at. Oil is still at $100 a barrel. That's with China shut down and with the U.S. draining its reserves. which we have a limited supply of. Now, the goal there, and usually the strategic goal, is, hey, we can drain our reserves when prices are really high because then we can buy them back when they're cheaper. But the big question is, will it actually get cheaper? And from this article and from other, I would, let's say that this is not the popular opinion, but this is the opinion that seems most true to me, most accurate to me, is that these energy prices aren't going to come back down and this market's going to need to reevaluate. So go ahead, and this article's been shared in the Discord. Make sure you also give her a follow on her Twitter, and she puts out lots of great content as well, for over almost 500,000 people, so you can see how far her reach is. I think this is great data and a great part of the conversation for the current market environment that I think we need to stay tuned into. And I think an important part that we should add to the energy conversation is also this headline right here. Russian gas to Europe goes down for 10-day maintenance on Monday, and Germany is bracing for Putin to use the opportunity to cut off flows for good. This is very likely. I think that this is exactly what Russia will do. This kind of goes into their strategy, which is working. The Russian ruble crashed hard when war broke out, but now it's at a 5-year high and doing great. This is because Russia has a great strategy. We have tons of natural resources. Most of the world is hurting for those. If you want them, you're going to have to use the Russian ruble. And this has led to them kind of climbing back from this, that huge pitfall and being cut off. And now they're clawing their way back saying, hey, you have things you need and we have them. And we're going to continue to put pressure on you just like you're putting pressure on us. And since they have such a wealth of natural resources and reserve, they can do this. And it's working for them. So, thinking about going back to natural gas, I think that this will give a great opportunity for that trade coming into the end of the year, maybe into the winter. As well, and there'll be another base case for, hey, energy is not done and these prices could stay persistently high. And now it's time to talk about another major conversation that everyone's loved to tune into, so of course I'm still going to cover it. Elon Musk has terminated the Twitter merger agreement, and he's calling for Twitter to reveal more of its algorithms and to be more transparent. This has led to lawsuits on both sides. Now remember, this lawsuits will give us information on both sides. So if Twitter wants to move forward in suing Elon, they're going to have to go in court and actually prove that there is less than 5% of bots on Twitter. And, leading up to this, we've seen them make major changes. We've seen them unban a lot of people. We've seen them pull back some of their algorithms and make lots of changes within the company. But Elon has said this is not enough, and he's backing out. Now, a few things could happen from this, though. This could be a 4D chess move for Elon to get a cheaper buyout of Twitter. Now, I would expect the stock to come down quite significantly on the news of this come Monday. And so keep an eye on that. But this also could be a positive for Tesla, since lots of people are selling their Tesla stock in anticipation of Elon unloading a bunch to make this buyout potential. Now, if he gets a cheaper price and doesn't have to sell as much stock, maybe he does his own stock buyback. There's been a lot of things that would create a more bullish headwinds on Tesla, and the market is in the short-term rally position. Given I still think it's a scary environment, I still think this is definitely a bearish market. But with these pressures, we could see that stock come back. And, as far as the larger conversation around the social implications of this, I think this will be really interesting to see how this continues to play out. In the beginning, when all this kicked off, I said it'd probably be months and months and months and tons of lawsuits. It hasn't played out the way I anticipated, but at the same time, it kind of has. It's led to lots of lawsuits and a big conversation around, how transparent is this company really? And what is actually a good price for Twitter? Is the board actually doing everything they can? They're kind of trying to paint this as like, look, he's now the bad guy. He's not keeping to his word and he's backing out. But Elon's saying, hey, you guys were always the bad guys and you've never been honest. So we'll need to see, how these lawsuits play out. If these lawsuits even play out, this could just be a threat. Twitter might not want to do this because it means they have to be transparent. And trust me, I think everyone will watch these cases as well with a very close eye. So Who knows if Twitter actually wants to subject themselves to the spotlight or if they'll let this die out quietly. Remember, they got to make this big scene right now on the news and on the headlines. They got to be upfront and make it look like he's the bad guy. Now, if they persistently keep up with this, then they're going to have to really let the transparency talk for itself. And that's not something we've seen this company do in the past. So it'll be interesting to see if they actually have some follow through there. Go ahead and let me know what you think down in the comments. It'd be really interesting to see how this plays out. And that'll be it for this Sunday report. I am exhausted. I need to go bathe in some aloe vera. I hope you enjoyed this Sunday report. We've been doing really good on the live streams, gotten lots of viewership there, picked up a few more subscribers. I appreciate that a ton. Striker is saying hello. Say hi, Striker. Yeah. And so we really appreciate that. I'll be doing some more live streams this week. We'll be producing more content. There's a few more things I wanted to talk about. Didn't make it into this video just because I am so exhausted. Nonetheless, I hope you enjoyed, and I'll see you on the next Sunday report and sooner if you tune into the live streams. And remember, check out the Discord. That's where all the magic happens. Link in the bio.